All right, give me just a moment to finish up getting this all together. Bear with me if you will. There we go. Making sure I'm live on YouTube as well. Given some opportunities to throw me a ticker, so if you like chatting, whether you're on the YouTube or in the Bullish Bears group in our live session here, you can actually speak to me directly in our live stream on our Discord server. Feel free, throw me a ticker if you like. Right now, I'm going to start going through pretty much Kramer's lightning round. We're going to start looking at a couple swing trade setups we're kind of monitoring. Also, before I do, I wanted to get with this really nice little diamond pattern we had on SPY, 1 minute chart. Pretty much spelled out our targets, gave it to us like perfect. Now we're kind of bouncing under the middle. And I wanted to kind of touch on what this really is. It's a big old bear flag, but it hasn't broken yet, and it hasn't given us any indication of a failed flag or a follow-through flag just yet. We're looking for a break either below range through this what we're calling the red zone, which links back to a candle from a couple weeks ago. Break through that, we'll certainly break through our channel line and start to run a bearish measured move setup. This will be a primary, secondary be a little lower. Or if this flag fails, we'll break out of its range by about 75 cents would be the signal. Breaking above this little liquidity zone here would give us a return to high. So I'd rather wait for these flags to break before I take any kind of swing position on any options day trading or anything like that. But I will tend to scalp this range with futures. I'll usually find all kinds of patterns within this stuff, especially on a 5-second chart. I can pick off some pretty easy range trading with that. But for now, it's a range day until this flag breaks. So we'll just trade the break when it comes. It may come later this afternoon. It may not come at all today. It might not come out till tomorrow. But one way or another, we will get a trend out of this someday. So I was kind of hoping for a trend day today. I was kind of hoping to resume a secondary move after this consolidation into a breach of our expected high. But that just didn't happen today. We didn't get it in the cards. We got a kind of an unexpected breakdown to test our critical support area. And here we are waiting for confirmation to either break bearish or bounce off our channel regression line and run back in the bulls. All right, let me go get the Kramer list out here. Kind of put it all into one, and this was a lightning round that came out literally 6 days ago, but I like to follow through with this stuff, kind of pick off the points where he called it, and then move forward with possible trade plans. Today, I want to kind of leave some of his comments out of it, other than the fact that some of them he was looking for, a stay away signal, and others he was kind of saying maybe buy it, but he wasn't very clear on a lot of stuff. So I'm gonna just kind of roll through it. One he said was an absolute winner that he would buy, GE Healthcare here, and man, I just don't know. That was one heck of a parabolic move. Let's look even further back. One hell of an IPO move, typical. Here we can see it here on a daily chart. Primary, halfback, secondary. All targets were met on that bad boy. Now we're just waiting to see if we retrace the mean of this move here. So I've got kind of a pivot loosely placed at about 83 bucks. If we can resume this bearish pullback, we can maybe start looking for a bull trade there. Or if you're already short, you can expect a finish follow through of this move here. Let's go to a 4-hour. You're looking for a primary, secondary move. Pretty simple. He kind of top ticked this one. Let's see here. 1, 2, 3, 4, 5, 6. He was saying buy here. There's your Kramer wave, as I would call it. We got an extension. So yeah, for the short term, people were chasing it. But that's just what we do when we see Kramer talking about stuff. We like to go and look at what he's talking about because it brings attention to that stock, and thus momentum and price action happens. So primary and secondary move pretty much in play here is just a 1-for-1 down to our pivot, and right around 83 or so we would look for support. So if this breaks, and currently we have same setup we're seeing on SPY, primary move looking for a bear flag break, and if this then that, you look for half and whole move. So kind of have your targets split about half that box, so about 85 to 83 would be the bear targets. You know, if you trade from here to 85, you're looking for an extension down to 83 and beyond. If this fails and it starts to get back above the width of this essential channel that a bear flag will create, you look for a possible failed flag. Typically, those will aim for a half back scenario. So you'll look, if this fails and it starts to reverse here, you're looking for a move back up to about 91.50. So if you're going to try and short this now, it wouldn't be a great idea. I'd rather wait for a break. And that is exactly why you have a danger of reversal running it back to about half of this move. So wait for the break, trade the break, go with momentum is going to be the best advice I can give on that one. And by far, I'm not a financial advisor. This is just trading setups, trading ideas. So bear with me here. So I'm going to wait for this thing to break, and if it breaks south here, I'll take the bear trade. If it breaks north here, maybe I'll take a bull trade. I'll just wait and see. Okay, kind of sums it up. Looking at the next one on the list, Manhattan Associates. I'm not so sure about this one, but it gives you a very massive weekly move, or monthly move, if you will. Slow trending stock. This is, you know, something investors kind of look for, slow, steady growth. But this is parabolic compared to this. And we can see this was a bit parabolic to this. So when you get these outsized moves like that, typically you're going to get a pullback of some kind. Typically. Here you can see the secondary broke over, gave half of that mean back with a wick. Bounced, retraced half of that move back, and then continued to break over and ran back for a complete measured move breakdown almost to this low here. And then it sort of rounded on out. Well, then we ended up with a cup and handle at the top of the trend. You see all the rounding there. There's your pullback, the handle. Found support in this area here. Made a big primary move, gave half back. And instead of stacking the boxes one on top of another and just looking at a half move up, all we got to do is follow this size back to that half back move, set your base there, run it out. It made that target. So within this, you have a measured move here. So you're likely to pull back to about this level here between the top of this and the middle of this. So it can continue running parabolic. Always remember the market can remain irrational much longer than you can remain liquid. But I'm going to start, paying attention to this one for a possible trade right around this area. Maybe get a quick short back to the mean if it breaks over. So let's drill down into the tighter and tighter time frames. I'll probably go to the daily chart. There we go. You can see a nice primary secondary move here, extended well above, and behold the tweezer top reversal. These are typically bearish when they're at the top of a trend. So we're looking at a current pullback that's already given up this whole bar as a move. You can see here, if you size that bar, it's already pretty much nailed that with a wick. So if this continues to break south, look for momentum to take it down here to about 223, 224. But if it holds here, it might just range around in this upper echelon of the big move until it finally breaks into a direction. So this trade from this peak here is already pretty much over. We're looking for a reversal here or continuation here. So this will be something, if you want to keep it on your radar for a nice long-term swing trade or even an investor type of stock. You're going to look for efficiency as an investor long term. You want to get the best price, obviously. You've got a whole lot of parabolic trend here to retrace. So maybe it'll give that number back down here. Maybe it'll consolidate here and continue moving on up. Really hard to call, but for short term, it's starting to look more like a few trades will take place beforehand. Let's see what's next here. Ares Capital. This is an interesting one as well. I didn't mark anything on this. That is pretty much parabolic like a lot of other stuff. Let's see if we can find some reason to this real quick here. There's a little bit starting to show here. You can start to see primary, secondary, and a weekly. What have we here? Well, we have a rounding. We have a run up above the previous high. And we have a couple retracement targets to find support. Whenever you break a resistance at any time frame, it is highly likely that it will test that level for support. Here we are. It's tested it for support. This is a fairly lucrative dividend stock. $20 a share. It's paying quarterly, 48 cents a share pretty consistently. More than likely, this is a company that's going to maintain a little bit of growth while paying its investors a handsome dividend. So they don't tend to have very violent moves. But here you can see it's had one before. So if we break this support level, we may continue to run down to the bottom of this bar here. And as per dividend stocks, typically your value investors will start looking for a ride to get into right around there. That's not much of a move, $20.15 to $19.75, not very big. So this is more of a long-term type of thing. And I think Kramer was saying he's excited that it did, make a nice big move as a winner. I didn't really say whether he'd buy it here or not. So I would kind of agree that it would be something to kind of stay away from until it breaks into a range or a trade, and then maybe you can make it into a long-term thing. Looking at the 30-minute chart here, you can see there is possibly a bear flag to break here and run for a bear target for the short term anyway, but it's not a massive move. So maybe if you're not the greatest day trader, you could start looking at stuff like this to maybe take very low risk, a share or two at a time, if you will, and practice your craft so you can go and maybe learn on a slower pace how to swing trade. Other than that, it's not the most interesting stock to trade. It's very, very minimal movement to me. But if you're a beginner, this is something you can use to practice with. Sure, keep your risk low. Make sure you're learning stuff from your trades and your trade ideas and plans. That's about all I could say for this one. Qualcomm. Would I buy it here? I don't know, man. Been tracking this for a while. Back when we first started looking at this was pretty much a primary trend. It came back, it retraced it, marked this as liquidity. I believe this showed up better on a daily chart for this zone here. Came back, did the market structure thing, came and accumulated for a while, eventually rotated out, broke its resistance, made a full primary, secondary move. That was a great trade. This extension was not expected, but it was also predictable. So when you break above a mean reversion like that, you tend to have a bit of follow through if you breach that liquidity zone, and it sure as heck did. Did it get to the previous highs? Not quite. That's where profit taking takes place. That's where this wick is. So let's break this into a daily chart and realize that there will be sellers here. So if you want to mark that off with another little zone, you get the go, no go level. So if this comes back, breaks this zone, you get one more play to run a little higher. If you reject here, you get bearish trades back to the mean. So you got this zone here. You could go as far as saying you could split this box down here, run back to the support level. You just start looking left and figure out where your support and resistance levels are. This one is very interesting for trading because it makes some pretty sizable movements. Now we're in a zone, so let's see if we get a 2-hour setup and maybe break a little lower here or rebound and range. So this will give us a couple trades later on. Would I want to own a stock at this height? Probably not my forte until it comes back down to a respectable level. But I've got plenty of other things that I'm already in, so I'll let that money ride. But for the time being, we have some setups here where we could continue to consolidate here and maybe break this zone, but wait till it gives you a signal on which direction to trade this thing. and of course split the middle of this right around there, around 163, 162, somewhere in that neighborhood. And if we breach this, we can eat this, no problem. If we bounce there, maybe we get a nice bull swing. So far, not really a lot to say about a trade plan on this one in the short term, medium term, but in the long term, look for a probable pullback here. It's a little more likely than anything to exceed this previous high just yet. It's got to accumulate somewhere. The old too far, too fast adage can kind of take shape in this one. All right, let's see here. Pure Storage, which is a definite Kramer favorite. This thing, again, nasty parabolic move. When we were looking at this not too long ago, we noticed that there was accumulation here in a diamond pattern, and it certainly broke. The trade was from the angular here to the top of the bull channel. Easy trade. Continuation on that thing, very hard to trust, but it did make a half size move, and this box is basically just reflecting this as a primary. So I just took the primary out to undirty the chart a little bit, more or less. Guess we can shade it a little better. Essentially, accumulation break, went to a half and then pulled back, gave half of that trend back, and then roared. I mean, just ripped faces off on that earnings call, man, and shot way out of the blocks. Well, when things go that fast, that far, they tend to almost always have some profit taking involved, and that's what you're seeing here over the past few days. And with respect, I'd love to see this thing pull back to 45 bucks. But if you split the earnings call difference, you're probably going to have a better idea of where this will go. So if you can see here, the daily right here, this is where you get the news pop, right? So you split that whole range in half, and typically you're going to find about where your target's going to be. So we can start top of that bar here, run that, and check it out. Half the box, right where we're at now. So if it's going to continue to run higher, this pullback would be healthy. It would show a reversal here and start to trend out. If it breaks this, we got a gap to fill, and it can certainly come back to 45 to 43. Anywhere in that neighborhood is fine. So this will be an interesting trading stock in the very near future. For now, we've pretty much nailed the half back scenario, or the half back rule, if you will. And we're just waiting for consolidation to break. Either we get a bear flag break and run it down lower, or we bounce here. And looking left, that's a big old range bar. So let's see if we can find a short-term target, possibly if a bear flag breaks for a day trade or a couple days overhold. Look for 47.75 and continuation from there. You know where it goes. It gives you all the levels. Looking for some pretty good swing trade ideas on this one. Looking bearish for the moment, but if it holds here and bounces, like I said, we can find a reversal after this and then rip the face off going up again. Neat stock to trade, but definitely volatile. We got some movement, so be careful, be nimble. Let's see, next one. I already looked at Aries Capital. What's going on here? They flipped price on me. Okay. Did we look at Qualcomm? Yes, we did. There it is. BWX. What can I say about this one? Pretty easy. Parabolic, big old measured move. Huge, huge steep trend. I mean, just psychotic price movement, right? This is going to be one of those stocks where you're expecting more volatility, but right now we're just kind of shaking in a middle ground area. So we've made a primary, secondary with a wick, touched that target, gave half back, consolidated, broke over, hit the whole move back, found us splitting these two moves. Now it's broken support a little bit. We could see this thing start to become a bearish trade. The hype is over, profit taking is well underway, and we're looking pretty bearish. And when you start breaking whole numbers, you break through that $100 bill, of course, momentum will sometimes take over. And if you look left on a 30-minute chart, you got a couple of zones you can plot for some quick bearish scalping. One would be here, grab that wick where you found buyers before. They'll be there again waiting. And if we're at this level, we break that, we get this range bar, pretty easy bear trade. If things get below this zone, so I'm going to mark it in orange where I would typically mark liquidity, we could start to fade this entire move. And of course, the half and whole rule also applies there. Eat half the box. If you look, there is some buyers here from previous support when it made this outside move. You got retracement. There was some liquidity here as well. There were buyers, so mark that as a pivot, and that can be a bear target. If we break this, we're going here likely. Pretty simple stuff. So this one I'm still a bit bearish on. In the meantime, there is a key support area here to take note of. If it holds that and bounces, well, your bearish trade idea can be over with at that point. So be nimble with this one. It's got some volatility in it. Let's see here. He mentioned COHR, and this is another one. I didn't really mark this one up, but I'm going to mark this one up live. To me, this looks like market structure. You got the big old parabolic move, and then you get the capitalization. We've gotten the half back of that whole thing where we're at now. But it's done this type of thing before. You look like your market structure chart here, small time frame of consolidation, rip back up. Same thing here, same thing here. It's happened over and over and over again. Go down to a daily level, we've got one hell of a bullish trend. And we can look left and realize, hey, there was a intermediate area here at about 48.50. And lo and behold, it accumulated and had a nice earnings call, obviously. Big old gap. And pulled back, gave half of that move back right there. Ran up for an extension, another half move up, and then came back below half of that move. So we've got momentum going to the bears here. And I think if we crack that whole number, $60, we could see this thing go and start attacking this gap. But first it'll run that range bar. So look for, move to about $55 from there. Let's zoom in on this thing and start picking off a couple of key areas. So one, you'll find a little demand here, but it's thin. And if the buyers can't hold this, look out, because that gap is right there. Pretty easy trade. Go a little further left. Nice breakover. It's got some good momentum today to the bearish side. And, we've got targets within, and there were some buyers here. So shorter term, mark that as a bit of a demand zone. And know that if we start crashing through this $60 bill barrier, it's a pretty easy shot running down here to 57.50 and maybe even eating a little bit more down to 57.30 or so. Easy stuff. So put your dope on the chart, and usually you'll find a pretty good idea of trade plan. Take another little piece of advice though. This is a range bar, and when you see these and you find yourself at the base of them, sometimes you'll find a reversal here. In this case, we just had some buyers short term. They tried to take it here. They were aware of that area of interest, but now we're looking more like a bear flag on a 15-minute chart. So crack that lower, split the difference. If this thing really gets bearish and nasty this afternoon or maybe even tomorrow, look for that range to extend a little lower, 58.80. And, you put that on your 2-hour, that finds about the middle of some liquidity here. So looking bearish so far until we can find support at any one of these levels. And long term, we have quite the trend that could possibly eat all the way down here to like $42. So definitely be aware of that. This is pretty much a trader's dream right here. You got very easy price action to spot, and you can typically take some pretty nice trades on this type of stuff. That's why this volatility is here. This is all about the traders. So definitely scalp the crap out of this one. This one looks really interesting for scalpers and traders alike. So I like this one. Oh, I think that's about it. I don't think we have anything other than a couple of mentions, maybe. I can go through those. We got some time. One that was mentioned about a week and a half ago. He said, "You should own BlackRock," is his exact words. Oh, man. So yes, we had a nice cup and handle. You can see rounding. There's your rim line. There's the handle right here. It broke the rim line, gave us the exact measured move. I mean, to the number. You can see the top of my little box here. And now let's give him back that entire move. Of course, split the mean. Look how precise that was at predicting where this would go. Now we're back to testing support. Anytime we break a known key resistance area, it typically will find itself becoming support later. And I never look at the first high on a cup and handle. I always look at the second high as the rim line. And that's exactly why it's always a little bit lower, almost always. And it gives you a little area of liquidity here. And you can see there's a candle. Daily candle is likely to stop here right at about 809.70, right? So I gave him a little credit on that one. I said, okay, it's a good buy. I would definitely own it in this area on that trade. Sure, but not anymore. Now we're looking for some retracement and profit being taken. That's exactly what we see here. The traders are coming off of this. Watch for support here. If it holds, we can see it trend higher. Sure, we can call Kramer a winner on that one. Give him the pat on the back, so to speak. I'm going to grade this out a little bit lighter. No, not orange. There we go. Jeez. Sometimes Weeble gives me fits. Okay. So you can see there was your primary. That's your secondary. There's your half move. Never hit the half move. So we still have some room to run. Watch for support here. Of course, if it doesn't hold, that plan can fall apart. Maybe we go bearish and retrace the bottom of the cup. We could even go so far as to retrace half of this whole thing here. Certainly look left at monthly structure and realize that, yes, we do have the makings of a big-ass measured move, but we could also retrace it. So be mindful, critical support areas matter in these states. And when you've got a nice clean cup and handle, they usually follow through pretty well. This is kind of where I'm seeing some buyers. So watch for buyers to remain here. And if we start to see a reversal after this, we could easily go and start trending here. So this may be a bull setup very soon. In the meantime, just kind of wait for the break. Take action when you see it. All right. Well, I think that's a good time to wrap up. My dog's also telling me it's time to go take him out for a quick walk and maybe let him handle some paperwork. And yeah, I think I enjoy doing this every week, so I'm going to keep doing this. And next week we will have Matthew Tuttle back, so we can do this with the cage match, so to speak, and drag Kramer in. And we can throw a little shade at Kramer and maybe give him a couple kudos when he needs them, But the whole point is that we like to help people learn how to trade and invest in the markets for themselves more than anything, and not always just chase a bunch of analysts around when they say buy this or sell that, and do what they say and get caught up in the mess. We would rather take technical analysis up against that, and out of every 10 things they might mention, you might find one or two worthy stocks to swing trade, and maybe occasionally one to invest in. But for the most part, I never do what they say. I always take a huge grain of scrutiny to whatever any analyst says. So whenever I'm hearing like upgrades, downgrades, or what have you, I'm always going to dig into the chart and let the chart tell me what I need to do, because the chart never ever lies. It will never mislead you. It'll usually give you clues onto where to expect it to go. And you can formulate trade plans based on the chart much more efficiently than you ever can on just taking some analyst's word for it. So never trust an analyst. Myself, I'm a technical analyst, and sometimes I don't even trust my own stuff. So let alone I'm not a financial advisor in that respect. So certainly, take a look at it for yourself. Do your own analysis. Do your own due diligence on there. And if maybe I've helped you formulate a trade plan, or at least get the idea how to find your own trade plan, I've done my job. That's my whole thing. All right, then, guys. Thanks again for joining me. We'll see you next week. Have a wonderful one.